Aadil, good to have you on the show. Walk me through your view of healthcare right now and whether you are going towards some of the biotech stuff that is focused on virus treatment, or if this is more a traditional view of healthcare and demographics that your team is looking at.
Great to be with you, Oliver. We work with physicians all across the United States, and what majority of our physicians, it's been very interesting because we are getting a bird's eye view of the medical perspective of how it relates to the stock market. And the fact of the matter is that in this world that we are living in, there are going to be certain sectors that are going to do well and certain sectors that are going to struggle. We believe that healthcare is going to be a sector that is uniquely positioned to do well in this post-COVID environment. And the physicians that we are speaking to, they are telling us that the areas within healthcare that they're especially optimistic about is more telemedicine, more PPE equipment, more investments into drugs to combat viruses, more testing. And what we really like to give clients exposure to this space is through the healthcare ETF XLV, which gives you the broad healthcare exposure. We also like, in terms of individual equities, we like Quest Diagnostics, which is making tremendous strides in testing. They've got FDA emergency use authorization for pool testing. They've got FDA emergency use authorizations for self-testing, and they have really increased their testing capacity over time. We also believe, Oliver, that telemedicine is here to stay, and Teledoc is a big beneficiary of that. According to a recent statistic, 97% of the practices have adopted telemedicine, and Teledoc has the infrastructure. 40% of the Fortune 500 companies are already their customers, so they're poised to benefit from this.
We've been talking quite a bit about Teledoc, the combination with Livongo as well, another company that's done extraordinarily well during this period. What are your thoughts on the deal?
I think it's great. It's basically giving access to data. The quality of treatment that a doctor can provide a patient is really dependent on the quality of data that the doctor has access to. And this partnership will really make good quality data available for physicians to provide great treatment. And Oliver, we are always, because we deal with physicians so often, we are always looking at stocks from a medical lens. And even some of these technology companies, they are doing amazing things with partnership with healthcare. Apple, for example, they have this ECG app where they are making, which cardiologists love, which tracks irregular heartbeats. Emergency room physicians that we are speaking to are always encouraging people to fill out the medical ID, because that gives the doctor life-saving information in the emergency room as well.
Right now, there is an overall move that has been broad for the space. Healthcare has done very well. Part of it has been some of these quarantine plays. Part of it has been the virus plays. It seems like you like the telemedicine and some of the tech that has been in focus. What about the actual biotech companies themselves? Are these one-time winners in the spotlight because of their work fighting COVID, or companies like Novavax, Moderna, Gilead? Are there ways to have lasting winners?
Well, a lot of these stocks, so in terms of the virus plays, you have the big companies like AstraZeneca and Pfizer, and then you have companies like Moderna, which are just a single drug play. And we feel that there's a lot of volatility in some of these companies, and in some of these companies it's already been factored in. So we believe that the way to get exposure in this space is through the XLV ETF, which is the SPIDA healthcare ETF, which gives you the broad healthcare exposure. But where we are seeing opportunity, Oliver, is more usage of PPE equipment. So a company like Kimberly-Clark, which is a beneficiary of that, where as we go through the reopenings, more PPE equipment is going to be used. And Kimberly-Clark is a leading manufacturer of N95 masks. But not only that, they have a really good diversified portfolio where they have the Scott toilet paper and the Kleenex tissue, which got a nice post-COVID boost. And they're also paying a very attractive dividend.
Where does healthcare and the tech perspective, I know that with Kimberly-Clark, that's a little bit more focused on some of the intermediate and right now kind of PPE, as you mentioned, some of the products that are needed. But from the tech side, when you talk about companies like Teladoc or Livongo, as a portfolio manager, how do they overlap with actual tech as a sector? Do they trade similarly? I mean, I know we've gotten companies with high valuations in healthcare technology that kind of looks on their chart like companies that are in software or tech. Are they distinguishable from the risk and the volatility that they put into a portfolio?
So a lot of these stocks, Oliver, they have gone up quite a lot, right? And we are of the Warren Buffett school of philosophy, where it's far better to buy a good company at a fair price than to buy a fair company at a good price. And tech has gone up, but there's a reason why tech has gone up. You know, in this post-COVID environment, tech is uniquely positioned to do well. So as an investor, if I don't have exposure to some of these companies, what I want to do is look at a dollar cost average strategy where I could buy the first piece right here. If it falls, I could buy the second piece. If it falls, I could buy the third piece. So to answer your question, yes, they are also pricey in some instances, but a dollar cost strategy, you could piece into them. And I would point out that, you know, this partnership between healthcare and technology is going to be the wave of the future. Some of these companies, Oliver, they're doing amazing things. So, for example, Facebook, through artificial intelligence, they're contributing a great deal for healthcare. And they have this radiologist that we are speaking to. They love this program that they have going on with NYU Langone, where they're working on making MRI scans 4 times faster. They also are working on artificial intelligence for suicide prevention by monitoring post, which becomes very relevant in this post-COVID environment.
Very interesting. When you talk about some of the big companies that have their hands in a lot and how they could get involved in more of a healthcare focus, I'm curious, I don't see Alphabet on your list, at least from the top points you sent over. I mean, they got Fitbit. That's, I imagine, going to be somewhat of a healthcare venture as well. Should we expect Alphabet to be one of these players?
Yeah, we like Alphabet as well, and you know, we believe that, you know, a lot of these large companies, they are dipping their foot in healthcare, which becomes really relevant right now. And again, even if you look at Amazon, for example, you know, Amazon is now supplying PPE equipment to hospitals and to government organizations. But there's a theme across all these companies. All these companies are intrinsically good companies, but they get a boost because of COVID-19. So when people are thinking, why are these stocks going up so much? There's a reason. Apple, they're a great company, but because of COVID-19, people are sitting at home, they're consuming more of Apple's services. Apple's services are its crown jewels. More than the profit margins are twice that of the product division. Facebook, you know, great company, but social distancing has made social media indispensable. People are spending more time on their platform. Amazon, you and me, we are working from home. We are using the cloud services. More than 60% of Amazon's profits are coming from the cloud division. So in the health tech company, not only are these companies doing great from a technology perspective, they're also doing great from a medical lens perspective. That's why we like them.